Equity markets continue to push the post-Christmas trend higher. The rally continues. It doesn't seem like it's ever going to stop. But we're nearing a pretty critical resistance coming up around 2,800 in the E-mini S&Ps. Recall back in December we hit, that was basically a triple top we hit, maybe a little bit above that, but it was a triple top at 2,800. We're going to near that level. That's going to be a tough level to get through, and we're going to need some help. It can't just be bullish expectations that get us through there. We're going to need some hard earnings announcements. We're going to need some kind of clarity on China. We're going to need some kind of clarity from the Fed, whether they're really on hold or is it just for the first half of 2019. And likewise, the risks that are being echoed and rippled throughout the markets via Brexit. So right now, that's going to be our next stop. And if we get there, we'll probably stop for a while. But the rally, the post-Christmas rally, looks very strong. We've had some good earnings numbers to support it. Likewise, with the State of the Union behind us, I think that there is less caution or uncertainty about U.S. economics, at least for the short term, and we'll continue to push forward. And that being said, the trend is your friend. Look at the VIX index. The VIX index is closed at its lowest since October, probably heading back towards that dreary 10 level. Remember that from 2017 and early 2018. That was a level that we probably didn't think we'd see again for a long time, given the fact that not too long ago we were trading above 20 and even nearing 30. So right now the VIX index really has made a reversal as this Christmas trend continues to extend. I think once we do hit that 2,800 level, we will see the VIX obviously turn around with the idea that there could be a two-sided trade coming post after we hit that. And lastly, let's talk about what's ahead. We've obviously the State of the Union behind us. We've got the Powell Town Hall meeting this evening. We've got China trade talks. And yeah, there's another potential shutdown looming out there. So all this could be perfect timing. We get near 2,800 in the E-mini S&Ps and we get some news that isn't so favorable. Things could turn south and turn south very quickly. So look for that resistance up above, but certainly keep in mind the fact that this trend has been going on since the day after Christmas. So it's been a long-standing trend. A modest pullback doesn't mean that it's going to end. It may just mean there is some profit taking out there, especially ahead of Brexit, which is March 29th. No, that date hasn't changed, and we likely will continue to see risk come off the table. Maybe not until the beginning, maybe middle of March when we start to get closer, but that is certainly something to be wary of. And as we're getting ready to hit a critical resistance, maybe a modest pullback wouldn't be a bad thing in the equity markets.